This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's fuel oil imports rebounded to 3-month highs in August, while export volume for bunkering dropped to 5-month lows, customs data showed on Friday. August imports totaled 1.90 million metric tons, or about 390,000 barrels per day, 38% higher than July and 36% up from a year earlier, showed General Administration of Customs data. A looming tax revamp could have driven some refiners to pick up more barrels ahead of its implementation, while a softer high-sulfur fuel oil market in August also spurred buying interest, market sources said.
Oil refiners in Asia, Europe and the United States are facing a drop in profitability to multi-year lows, marking a downturn for an industry that had enjoyed surging returns post-pandemic and underlining the extent of the current slowdown in global demand. The weakness is a further sign of soft consumer and industrial demand, especially in China, because of slowing economic growth and rising penetration of electric vehicles. New refineries coming on stream in Africa, the Middle East and Asia have added to the downward pressure. Refiners such as Total Energies and trading firms such as Glencore saw bumper profits in 2022 and 2023 as they cashed in on supply shortages caused by Russia's invasion of Ukraine, disruptions to Red Sea navigation by Houthi militants, and a big recovery in demand following the COVID-19 pandemic.
Moving on to the top news in the energy sector.
Norway's combined oil and gas production exceeded an official forecast by 8.3% in August, the Norwegian Offshore Directorate, NOD, said on Friday. Norway is Europe's largest supplier of natural gas and a major producer of oil, with output varies from month to month depending on maintenance needs and other stoppages at more than 90 offshore fields. Overall oil, condensate, natural gas liquids and gas output stood at 0.664 million standard cubic meters per day, equivalent to 4.2 million barrels of oil equivalent, an increase of 4.7% year-on-year, NOD data showed.
Oil prices settled lower on Friday but recorded a second straight week of gains, garnering support from a U.S. interest rate cut and a dip in U.S. supply. Brent futures settled down 39 cents, or 0.52%, at $74.49 a barrel. U.S. WTI crude futures settled down 3 cents, or 0.4%, to $71.92. Signs of a slowing economy in major commodity consumer China gave prices a ceiling. But for the week, both benchmarks settled up more than 4%. Prices have recovered after Brent fell below $69 for the first time in nearly 3 years on September 10. Next, we have the top news in metal markets. Iron ore futures prices edged higher on Friday but logged a weekly loss, as traders weighed prospects of fresh monetary stimulus from China against the top consumer's muted economic recovery, while firmer global supply also weighed on prices. The most traded January iron ore contract on China's Dalian commodity exchange ended daytime trade 0.15% higher at 680 yuan, $96.43, a metric ton. The contract declined 3.41% for the week. The benchmark October iron ore on the Singapore exchange was 0.99% lower at $91.75 a ton, as of 0325 GMT.
Gold soared above the $2,600 level on Friday for the first time, extending a rally boosted by bets for further U.S. interest rate cuts and rising tensions in the Middle East. Spot gold was up 1.3% at $2,620.63 per ounce by 1:43 p.m. Eastern Time, while U.S. gold futures settled 1.2% higher to $2,646.20. Bullion's latest rally got a fillip after the Federal Reserve initiated an aggressive easing cycle on Wednesday with a half percentage point reduction, adding to the appeal for gold, which pays no interest. Prices of the safe haven asset have climbed 27% in 2024, their biggest annual rise since 2010, as investors also sought to hedge uncertainties spurred by prolonged conflicts in the Middle East and elsewhere.
We will now look at the top news in the agricultural sector.
China's soybean imports from the United States rose 70% in August from a year earlier, customs data showed on Friday, as buyers took advantage of low soybean prices. Shipments from the US, its second biggest supplier, have gained pace since April, though volume remains much smaller than top producer Brazil. China imported 202,383 metric tons of the oilseed from the US last month compared with 119,105 tons a year earlier, showed data from the General Administration of Customs.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.